Hi students, how are you? Can you hear me? Can you hear me? If you need to communicate anything, you can communicate here in a chat box. Students, can you hear me? Okay. I welcome you first class of FR. Before I start the class, let's discuss something about the paper of financial reporting, course plan, and your exam pattern. So, as you know that the paper which we are studying here is FR, financial reporting. Now, this financial reporting paper is a continuation of paper at FT level or FIA level of paper F3. It is a continuation of paper F3, and this is a base paper which you will study after FR of SBR, Strategic Business Reporting. It is very important paper because in this paper we are not only preparing financial reporting paper, but it will be the base of SBR, Strategic Business Reporting, which is a final paper of reporting in ACCA, and at the end it will also very important for AAA paper, Advanced Audit and Insurance. It is also very important for that paper because there will be a touch of accounting standard in AAA, and there will be a whole question on accounting, on auditing, which is related to accounting standards. So this is the importance of this paper which we are going to study, or we're going to start today. Now, if we discuss the course plan, here we have the course plan. Let's discuss this first, then we will discuss the exam pattern, that how the exam will appear in your paper, how the question will appear in your paper. So this is a course plan. I'm your tutor, Abu Bakr. This is a course plan, and this is a syllabus which we're going to discuss now. We have in our FR paper, we have IAS 16, property, plant and equipment. This is the first accounting standard which we will study. It is related. This is basically the accounting standard which we have studied. You have studied at F3 level, in which we have studied depreciation, about tangible non-current asset. So a little bit this standard has already been discussed at F3 level, and we will be discussing it again in FR paper. Then we have IAS 20. This is an accounting standard of government grants. Government grants mean the help of the government for entity in a form of resources which they gave to the entity, or in some other form. We will discuss the accounting of such government grant in IAS 23. We have IAS 23. Then we have IAS 23. IAS 23 is an accounting standard of borrowing cost. Borrowing cost means finance cost, interest cost. in some situation, borrowing costs are capitalized as a part of the cost of the asset. Such things we will be discussing in IAS 23. Then we have IAS 36. IAS 36 is the accounting standard of impairment. Impairment mean reduction in the value of the asset due to some incident or some burst situations. Impairment of asset. IAS 38. In IAS 38 we will discuss the accounting of intangible non-current asset like software, brands, franchise right, license. These are the intangible assets. We have IAS 40. This is investment property. Investment property mean a property which is the purpose of the property is to give on rent or that is held for capital appreciation. That is called investment property. For those for such properties we have IAS 40 investment property in FR. We have IFRS 5. IFRS 5 is a accounting standard of non-current asset held for sale and discontinued operation. We purchase the asset, we use that asset for certain period of time, but now we decided that we will dispose that asset. Now the asset about which we have decided that now we are going to dispose it, that is known as asset held for sale. And for such assets we have IFRS 5. Similarly, the discontinued operations, sometime we decided to discontinue from a particular product line or from a particular geographical area. How it will be accounted for, it is also deal in IFRS 5. We have IAS 12 income tax. A little bit touch is given of IAS 12 at FR level, but we will discuss this topic in detail at SPR level. But little bit touch has been given at FR level. IAS 12, we have IAS 2 inventory. IAS 41 is a biological asset. This is the accounting standard which cover the accounting of living things like plants and animals. Okay, IAS 41. Then we have IAS 8. This is the accounting standard of accounting policies, estimate and errors. We have then IAS 37, provisions, contingent liability and contingent asset. We have IFRS 13, it is on fair value measurement. We have IFRS 15, this is the standard on revenue. Then we have financial instruments, IAS 32 and IFRS 9, basically IAS 32 and IFRS 9. Let me it is not 39, it is IAS 32 and IFRS 9 financial instrument. This is the basically topic related to financial instrument, like bank loans, trade payables, receivables, loan receivables, investment in equities. Okay, these are known as financial instruments. These things are covered in IAS 32 and IFRS 9. Then we have IFRS 16 lease, IAS 10 events after reporting period. Then we have IAS 33, which is the earning per share. Then we have IAS 7 cash flow. Then we have introduction to group accounts, which is known as consolidated financial statements. Adjustment, which we will learn in a consolidated financial position and consolidated statement of comprehensive income. So that is the course plan, and this is your syllabus, which we will study in FR, in F7 paper. Okay, you get it? As far as the study text and the practice exam kit is concerned, the notes will be provided. We have the notes. So the notes will be provided for FR level, which will replace your study text, and for exam kit, as far as the exam kit is concerned, we will use Kaplan exam kit for FR level, and it will also be provided to you in a soft form. The exam kit will also provided to you by the academy. So that will be the study material, notes and the Kaplan exam kit. But if any student want to read the book instead of notes, I would recommend that then he must or she must go for Kaplan study text. That is, I think that is better than PPP. Okay, so if you want to read the paper or if you want to read the topic from the study text directly, then I would suggest that you go for Kaplan study text. Okay, otherwise the notes are sufficient, and those notes will be provided to you by the academy. Any question relating to course plan? Any question? Okay. Now, exam. Now, let's discuss something about your exam. As you know that this exam will be a computer-based exam. It will be a CB exam. Now, there will be total 100 marks, 50% marks need to get the pass this exam, and this exam will be consist of 3 parts. Part A will be OT questions, and there will be total 15 OT question, and each OT question will be consist of 2 marks. So 30 marks we have in a part A. Part B will be OT case studies. OT case studies are similar to OT questions, but there will be a small case study, and related to that case study, we have 5 OT questions in each OT case study, and there will be 3 OT case study in your exam, and each OT case study will be consist of 10 marks. 10 marks means in each OT case study there will be 5 OT questions. Okay. OT question means MCQs, fill in the blanks, drag down, matching, okay, drop down. So just like you have attempt the exam at F3 level, okay. OT question means the MCQs and fill in the blanks, like question I'm talking about. So each OT case study will be consist of 10 marks. So total again 30 marks will be we have in part B. So I can say that 60% of your exam, 60% of your exam will be based on just clicking. You just need to click the right answer or maximum filling the blank. Okay. So it is just like exam, 60% exam is just like the exam you have at FIE level or FT level in F3 paper. It is similar to that. Then we have the part C. The part C is the constructive response question. In a constructive response question, we have a proper question which will be which we will answer using the spreadsheet or word format. Okay, there might be a question on consolidated financial statement or final accounts, or you can say we have a topic of ratio analysis. We have a topic of a ratio analysis in a financial statement, preparation of financial statement. So we have such type of question, a constructive question, and there will be two questions, and each question will be consist of 20 marks. So here we have total 40 marks in a constructive response question, and that's how the 100 marks will be completed. But now let me show you that how this exam will appear on your screen. So the screen which you are looking at, it is basically the part C, because the part A and part B questions are not given in a past exam paper at ACCA Global, but part C is available. But in a sample paper, I can show you the part A and part B as well. But at the moment, you are looking at the part C of your exam, that is a long response, constructive response question, and it is like we have the question. You can see this is a question on ratio analysis where we calculate the ratios and we interpret the ratios. And on the other side of the screen, which you can adjust as per your requirement, this is your response area where you will you will calculate on a spreadsheet which is given, and you will then give your analysis on this screen by typing in this question. And the next, when you complete this question, you can move to the next question. And the next question is on consolidated financial statement. We have to prepare the consolidated financial statement, and for that purpose we have spreadsheet, Excel sheet on your exam to answer this question. Okay, so this will be the type of the constructive response question, which are the part C of exam, and there will be two questions, and each question will be consist of 20 marks. So, and the total 40 marks will be available here. In calculation, obviously you need a calculator, but you will see that when we will be using the spreadsheet, there will be a very little need to use a calculator, because we can use the spreadsheet to calculate anything. Okay, but we will learn it when we will come to the part C of your exam, in exam practice. Now, in exam practice, but we have calculator here on on your screen. We can use this calculator, but there will be very little need to use the calculator, especially when I'm using the spreadsheet. Yes, in a previous question where we have a ratio analysis, where we have the ratio analysis, where we have the ratio analysis, obviously it is a word format, and in a word format we cannot do the calculation on screen. Obviously here the calculator will be having some importance. Okay, but in a spreadsheet there will be a very little need to use the calculator. So you can see here now on your screen, part A 50 objective test question, part B 3 OT case studies, and part C a 2 question of constructive response question. And this is a sample paper, and here I will show you the part A and part B. So this is a part A. You are simply looking at which of the following is a possible advantage of rule-based system of financial reporting. You have to choose the right one. So you will just click the option and you will move on. Which of the following should require adjustment because of this constraint? I'm not going in a right or wrong question, but I'm just telling you, you will choose your desired answer. Move on. Again, you have another OT question. You will choose your right question, right answer, and you will move on. So part A will be consist of such. Now we have fill in the blanks. Then again we have to true or false, correct or incorrect statement has to be carried at lower of their carrying amount and recoverable amount. You will choose the right. Is it correct or incorrect? The recoverable amount of an asset is a higher value in use, value in use, or favorable less cost to sell of disposal. Correct or incorrect? You will choose your desired answer and move on. So this is a part A of your exam. Now let me take you to the part B. Now part B is as I told you, part B is the OT case study. Now you can see at your screen, this is a case study. On the left side of your screen is a case study. You will read the case study, and then according to that case study, we have OT question. On right side of your screen, you can see that there is a OT question. There is a OT question. In accordance with I-16 property, plant and equipment, what is the value of addition to the plant for a company for the year ended 30th June 20x5? So you will write your answer here. Then when you will click the next, the OT case study will remain the same. The OT case study will remain the same. OT case study will remain the same, but the question, OT question will change. This is a first OT case study, and now this is a second OT question relating to this case study, and so on. This is a third OT question relating to the OT case study, first OT case study. This is a fourth OT question relating to the first OT case study, and so on. And this is a final question of first OT case study. And each OT case study, as I told you, will be consist of 5 OT questions. Now, it is quite possible that in 5 OT question in a OT case study, you might give one answer wrong, and you answer for the 4 question right. And let me tell you, only 2 marks will be deducted. So if you have selected 4 right answer and 1 wrong answer, you will get 8 marks from the OT case study. If you have 3 right answer and 2 wrong answer, you will get 6 marks from the OT case study. So the questions are not, the marks are not dependent on each on other question. Okay, the right answer will get 2 marks and the wrong answer will deduct your 2 marks. You get it? So this is your part A and part B of your exam. Any question? Any question, students? Any question relating to your exam pattern? We have discussed course plan, syllabus. Can you hear me? Time duration of what? Exam? If you're talking about the exam time duration of the exam, it will be 3 hours and 15 minutes. 3 hours and 15 minutes. Any other question? Okay, then let's start the class now from the first topic. And the first topic which we are going to start is property, plant, and equipment. Property, plant, and equipment. This is IAS 16. Now, what is our property, plant, and equipment, and what we are going to study in IAS 16? For that, we have to discuss the definition of property, plant, and equipment. If we define the property, plant, and equipment, the definition is the property, plant, and equipment are tangible non-current asset. Now, when we say the non-current asset means the useful life usually more than 1 year. The useful life more than 1 year or 12 months. And tangible means the asset with the physical substance, like car, vehicle, manufacturing plant, building, land. These are the tangible assets. Okay. So the property, plant and equipments are tangible non-current assets which are held for, and the purpose to hold those assets are for number one, maybe for production purposes, or held for administrative purpose, or to provide services, or to for rental purpose. But when we talk about the rental purposes, if we have a property, which is held for rental purposes, then the accounting standard will be IAS 40. But other than property, if we have some tangible non-current asset like cranes, like bulldozers, like cars, vehicles, which we use for rental purposes, that will be accounted for in IAS 16. But if we have a property which is held for rental purposes, then the accounting standard will be IAS 40, investment property, IAS 40, investment property, then it will not be accounted for under IAS 16. So if we have a property, plant and equipment which are held for production purposes like manufacturing plant or a factory building or a land for factory, or administrative purposes like head office, or to provide services like hospital building, restaurant building, like hotels, okay, uh, rental purposes other than property. If we have such tangible non-current asset, those non-current assets will be known as property, plant and equipment, and they will be accounted for under IAS 16. You get it? So in a simple words, the tangible non-current asset which are held for use in business, the property, plant and equipment which are held for use in the business, those will be accounted for under IAS 16, property, plant and equipment. Under IAS 16, property, plant and equipment. You get it? One more thing which is accounted for in a IAS 16 in a property, plant and equipment, that is bearer plant. Bearer plant. By plant, when I say the plant, it is not plant and machinery. When I say the bearer plant, that means I'm talking about a biological asset. I'm talking about a biological asset. Biological asset. Okay. Now, plant means a plant of pineapple, plant of mangoes, plant of apple, plant of, you can say, I'm talking about strawberry plant. So plant, bearer plant. Now, what are the bearer plant? We have two types of the plant. One is non-bearer and one is bearer plant. Non-bearer plant, if I give an example of the non-bearer plant, a plant of a rice crop. Rice crop is a non-bearer. A wheat crop is a non-bearer. Strawberry crop is a non-bearer, because to get these things, we have to harvest. We have to harvest the plant. We have to seize the life of the plant. We have to seize the life of the plant. Those are non-bearer. But a tree of a mango, a tree of a apple, a tree of a, you can say, apricot, these are a tree of a peach, these are bearer plants, because they will continue to give us the production over the number of years. Okay, over the number of years, a plant of a tree plant can give us a production of the apples. Sorry, a plant of an apple can give us, a tree of an apple can give us a production from over the number of years, continuously over the number of years. So these are known as bearer plant. So the example of bearer plant is apple tree, tree of mango, tea plant, a tree of a date, and so on. These are all the example of bearer plant. These are all the example of bearer plant. And the bearer plants are accounted for in property, plant and equipment IAS 16. Bearer plants are accounted for in IAS 16 property, plant and equipment. Okay. So it is the definition of property, plant and equipment. Any question? And if you take the examples of the, if you take the example, that means in IAS 16, plant and machinery will come under IAS 16. Buildings, lands, car and vehicle, furniture and fixture, these are IT equipment. These are all the example of the property, plant and equipment, and these all things will be accounted for under IAS 16. You get it? Any question? Now, some other definitions which we need to discuss before we further move into IAS 16. Carrying value. Carrying value or okay, non-bearer plant. Non-bearer plant means the plants which give us the agriculture. We say agriculture. Agriculture produce like a wheat, rice, crop of a rice, uh, strawberry, crop of a strawberry. These are the non-bearer plants. Because non-bearer, why I'm saying non-bearer plant? Because they will give us a product once in their life. Okay, because to get the benefit from such plants, we have to harvest these plants. So to get the rice, we have to harvest the rice. To get the wheat, we have to harvest the crop of the wheat. Okay, so these are the non-bearer, by nature non-bearer. Their life cannot be more than a year. Non-bearer plant life cannot be more than a year. Okay, and as compared to the non-bearer plant, we have a bearer plant like a tree of apple, tree of dates, tree of pineapple, tree of coconut. Okay, these are the non-bearer plants. And the non-bearer plants and the bearer plants, and the bearer plants are accounted for in IAS 16 property, plant and equipment. Okay, first definition we are going to discuss is a carrying value, or it is also known as net book value. Carrying value or net book value means the value at which the asset will be carried in financial statements, and these are equal to, carrying value is equal to cost minus accumulated depreciation. If we deduct the accumulated depreciation from the cost of property, plant and equipment, we will arrive at the carrying value of property, plant and equipment. Now, what is the definition of cost then? What is cost? Cost basically is the fair value of cost is the fair value of consideration. Fair value of the consideration to acquire property, plant and equipment. So the fair value, the consideration which is given to acquire the property, plant and equipment will be the cost of the property, plant and equipment. And what is depreciation? What is accumulated depreciation? For that, we have to discuss the depreciation. Depreciation. Now, what is depreciation? What is depreciation? Can anyone tell me about the depreciation? What meant by the depreciation? Anyone? What is depreciation? Yes, depreciable amount over its useful life. Very good. So the depreciation, if we define the depreciation, depreciation is the systematic allocation of depreciable amount over its useful life. Depreciable amount is the systematic allocation of depreciable amount over its useful life. That is known as depreciation. I will explain it, that what is the systematic allocation and how it will be allocated. But before that, what is depreciable amount? Here is a word of depreciable amount. Depreciable amount means the amount which will be depreciated. The amount which will be depreciated, that amount is known as the depreciable amount. And now if we define the depreciable amount, it will be equal to cost minus residual value. If we deduct the residual value from the cost of the asset, that will be known as depreciable amount. And this amount will be, if we allocate on a systematic basis over the useful life, the amount which we will arrive it on annual basis, that will be known as a depreciation. Now, for example, we have a plant. We have a plant at the cost of $10,000, and the residual value is 2,000, and useful life is 4 years. Okay. So if I ask you that what is the depreciable amount, what will be your answer? Yes, 8,000 is a depreciable amount, and this amount will be allocated over useful life on systematic basis. Now, systematic basis means that the depreciation method should be like that, which should show the pattern of benefit. which shows the pattern of benefit. And you know, mainly we have two types of depreciation method. One is straight line, method, and number two is reducing balance method. Straight line and reducing balance. There are other methods also, but we mainly use two methods: straight line and reducing balance. And number three, the maximum, the number three which we use is unit based or activity based depreciation method. In a straight line basis, the depreciation is equal to cost minus residual value divided by life. And in reducing balance method, depreciation is equal to cost minus accumulated depreciation multiplied by depreciation rate in a reducing balance. And whatever method we use, the depreciable amount will remain same. I'm again saying, whatever method I will use, the depreciable amount will remain same. Either I use a straight line basis or either I use the reducing balance method. Now, for example, now on a given data, if I use the straight line basis, now for example, if the depreciation method is straight line, then the depreciation each year will be equal to cost minus residual value divided by 4. So depreciation per year will be 2000 per annum. So here accumulated depreciation and carrying value of the asset. So in a straight line method, in a first year, the accumulated depreciation will be 2000. Year 1, accumulated depreciation will be 2000 and carrying value, cost minus residual value. Cost minus accumulated depreciation, that will be 8000. In 2 years, the accumulated depreciation will be 4000 and carrying value will be cost minus accumulated depreciation, that will be 6000. In year 3, accumulated depreciation will be 6000 and the carrying value will be 4000. And in a fourth year, the accumulated depreciation will be 8000 and the carrying value will be 2000. You get it? Yes, students, you get it? Now, if the similar data I would solve with the reducing balance. Now, for example, now if I use the reducing balance method for depreciation, reducing balance method. We know that in a reducing balance method, the depreciation is equal to cost minus accumulated depreciation multiplied by percentage. And let me tell you that in this data, the rate of depreciation, the depreciation rate will be 33.13%. This will be the rate of depreciation. So here depreciation, accumulated depreciation, and the carrying value. So year one, in year one, the depreciation will be cost minus accumulated depreciation multiplied by rate. This is a formula. Cost minus accumulated depreciation multiplied by percentage rate. So in a year one, there is no accumulated depreciation and the cost is 10,000 and the cost is 10,000. So 10,000 into 0.3313, it will be 33,000. Sorry, 3,313. It will be the depreciation for year one, and the accumulated depreciation will be 3,313. And the cost of the asset is 10,000. So the carrying value will be 6,687. You get it? You get this? And in the second year, depreciation will be cost minus accumulated depreciation. So the cost is 10,000 and now the accumulated depreciation is 3,313. So the carrying value will be 6687 into 33.13%. The depreciation will be 2215. And the accumulated depreciation now will be 2215 plus 3313, 5,528. And the carrying value, cost minus accumulated depreciation, 10,000 minus accumulated depreciation, that will be 4,472. Now in the third year, the depreciation will be 1,482. On same methodology, cost minus accumulated depreciation into depreciation rate. And the accumulated depreciation in a third year, at the end of the third year, will be 7,010. and the carrying value to 990, and in a final year the depreciation will be carrying value cost minus accumulated depreciation into percentage that will be 990, and accumulated depreciation will be again 8,000, and the carrying value at the end will be 2,000. Okay, you get it? And you can see in a straight line and in a reducing balance that in total the depreciable amount is same, 8,000. Accumulated depreciation is same. The end carrying value is same, 2,000, 8,000. So whatever method we use, the estimate will remain same. The depreciable amount will remain same, because the depreciation method are just the method to allocate the depreciable amount over useful life. You get it? Any question? Are you there? Can you hear me? Any question? Okay. The third method, which is different from straight line and the reducing balance, that is unit based or activity based depreciation. It is very simple one. For example, let's assume we have a plant which we purchase at the cost of 10,000. Residual value is 1,000, and the useful life is 20,000 hours. Useful life is 20,000 hours. Useful life is 20,000 hours. So we will calculate here depreciation per hour. Depreciation per hour, and that will be equal to cost minus residual value divided by total useful life, which is in hours, which is 20,000 hours. So the depreciation will be $0.45 per hour, and in each year the depreciation we will calculate the per hour depreciation into hours consumed, So if we talk about year one, now let's talk about year one. Here year 1, the depreciation in a year 1 will be equal to 0.45 dollar per hour multiplied by hours consumed in the year 1. And let's assume in a year 1 we have consumed 1000 hours. We have consumed 1000 hours. So the depreciation for the first year will be $450. Okay. This is the activity based depreciation or unit based depreciation. And the accounting entry of the depreciation to record the depreciation is, let me remind you, depreciation expense, account debited, or in some situation property, plant and equipment, the asset account can also be debited. If the expense of depreciation is a directly attributable expense of any asset to acquire an asset, then the asset account can also be debited. I just assume the figure to convey the concept. Okay. I just take the figure that let's assume that we have used 1000 hours in a year 1. So what will be the depreciation of year 1? Depreciation expense or property, plant and equipment will be debited if that asset is used for the construction of an asset. And we will credit the accumulated depreciation account. This is the entry which we use to record the depreciation expense, Now, another terminology which we may use in IAS 16 that is impairment. Impairment means that if carrying value of property, plant and equipment exceeds its recoverable amount. If the carrying value of the property, plant and equipment exceed the recoverable amount of its asset, then that means the asset has been impaired. For example, if I told you that the carrying value of the asset is $100, but the recoverable amount of the asset is $90, that means the asset has been impaired by $10. The asset has been impaired by $10. That is impairment. That is known as impairment. And this concept is based on a concept of prudence concept. We also have IAS 36 on this topic, but the definition is still relevant in property, plant and equipment. So the recoverable amount is basically the maximum benefit which we can get from the asset. So if I get the benefit which I can get the asset is $90 and I am carrying that asset at $100, then that means I am going against the prudence. That means asset has been overstated. So I have to impair the asset. So whenever the carrying value of the property, plant and equipment exceeds its recoverable amount, that is known as impairment. And recoverable amount, what is recoverable amount? In accounting terms, recoverable amount is higher of fair value less cost to sell or value in use. So to get the benefit from the asset, we have only two sources. Either we will sell the asset or we will use the asset. So what the business will do, which he will use the option which will give him a best benefit. So if I can sell the asset at $100, but if I continue to use the asset, I can get $120. What I will do? Obviously, I will use the asset, or vice versa. So recoverable amount is the higher of fair value less cost to sell or value in use. And if we compare the carrying value with the recoverable amount and the carrying value exceed the recoverable amount, the asset set to be impaired. So for example, if fair value less cost to sell is $90 and value in use of the asset is $80, what I will do? Obviously, I will sell the asset. So the recoverable amount is $90, or it could be vice versa. You get this concept? Okay, we are talking about the impairment, concept of impairment. Impairment means if the carrying value of the property, plant and equipment exceeds its recoverable amount. For example, if the carrying value is 100 and recoverable amount is 90, the asset set to be impaired by $10. Now, what is recoverable amount? Recoverable amount is the benefit which we get from the asset, and it is higher of fair value less cost to sell or value in use. Fair value less cost to sell mean if I sell the asset today, what I will get, that is fair value less cost to sell. And value in use means if I continue to use the asset, then what benefit I can get. So higher of these two values, fair value less cost to sell or value in use, will be the recoverable amount of the asset. Now, for example, if fair value less cost to sell is $90 and value in use is $80, what we will do? We will continue to use the asset or I will sell the asset. Obviously, if I am getting more benefit by selling it, obviously then I will dispose the asset. Okay, that is $90. So the recoverable amount is $90. And if the carrying value of the asset is 100 and the recoverable amount is 90, that means the asset has been impaired by $10. You get it now? Any question? Okay, now we will take a break. take a break, and after the break, we will resume the class. Okay, a break of 15 minutes. Break of 15 minutes. Hi students, how are you? Can you hear me? Okay, now after the definition, we're going to discuss the recognition. We're going to discuss the recognition criteria. Recognition criteria, property, plant, and equipment. Recognition criteria means the criteria which need to be fulfilled in order to recognize the property, plant, and equipment in financial statement. Recognize the property, plant, and equipment in a financial statement. The things which need to be fulfilled, conditions need to be fulfilled. Those conditions are known as recognition criteria. Number one, future economic benefits are probable. The expenditure which we are incurring, from those expenditure, the future economic benefit entity will get are probable. And number two, cost of those expenditures can be measured reliably. And we can measure the expenditure, cost of those expenditure we can measure reliably. Then such expenditures can be capitalized as a property, plant, and equipment. Property, plant, and equipment would be debited and the bank account will be credited. If any of the condition is not satisfied, for example, if we have incurred an expenditure from which future economic benefits are not probable, that cannot be capitalized as a property, plant, and equipment. Now, after the recognition criteria, we have measurement. that how a property, plant and equipment should be measured. Now for measurement, we have two measurement situations in IAS 16. One is known as initial measurement, and the other one is known as subsequent measurement. First of all, we will discuss the initial measurement. Subsequent measurement will be discussed later on. Initial measurement means that when we are going to initially recognize a property, plant and equipment, then at what value the property, plant and equipment will be measured. And IAS 16 is very clear about that. And as per IAS 16, initial measurement will be at cost. Initially, property, plant and equipment on initial date, when we are going to recognize the property, plant and equipment, initially it will be measured at cost. And when we say the cost mean list price minus trade discount plus non-refundable tax plus non-refundable import duties freight charges plus site preparation cost plus installation charges plus testing cost, but the testing cost will be added on net basis. Net basis means when we test run, obviously it will involve the cost, but due to test run there will be some production and that have some scrap value. So on net basis, the testing cost will be capitalized as the initial cost plus the present value of dismantling cost, present value of dismantling cost will be capitalized. Dismantling cost means that on entity there is an obligation that when they have installed the plant, after the useful life, the plant will be dismantled from the site and site will be restored. So the cost involved is known as dismantling cost, and at present value, that dismantling cost is capitalized as the part of the cost of asset. And plus any directly attributable expense, any directly attributable expense which is necessary to bring the asset into intended use will be capitalized as the part of the initial cost of the asset. These are the same elements which you might have studied at your basic level. But there are some costs, some elements which cannot be capitalized. And those elements which are not capitalized are as follows. Now, not part of asset cost. Initial operating losses. Initial operating losses are not capitalized as the part of the cost of the asset. Initial operating loss. Number two, any abnormal loss will not be capitalized as the part of the cost of the asset. Abnormal loss. Staff training cost. Relocation expenses. Promotional expenses. And number six, journal and administrative overheads. These are also known as centrally allocated overheads. These are not capitalized as the part of the cost of the asset. Just a minute, I'm looking for something. Okay. So for practice purposes on initial elements, just for practice purpose, for the clarity of the concept, we are attempting this question. Please read it. Amar is a manufacturer of a personal product and has a factories in 2 different cities. On 1st November 2011, he bought a new state-of-the-art plant from Grants International USA, Incorporation USA. The invoice value of the plant was 250 million. Other relevant details are as follow. LC opening charge, the letter of credit, is 1 million. Letter of credit means that without letter of credit, we cannot import anything. Okay, that is a necessary expenditure to bring the asset into intended use. Import duties, sale tax recoverable against the production output, clearing and transportation, then cost incurred on a site, consultant fee 2 million, civilian and electrical work 3 million, and above include the cost of equipment damage due to mishandling is 0.8 million. The plant was received on a site on 1st Feb 2012. Installation and the test run were successfully completed in 3 months' time at a cost of 6 million. The net sale proceed of the testing production was 1.2 million. Commercial production commenced on 1st May. During the period in which the plant was installed, administration and general overheads increased by 1 million. These are directly attributable overheads. These are not general and administrative. These increase due to the installation, so directly attributable expenditure. Salary of a factory manager was 0.25 million per month. He contribute his 30% time on supervising the installation, and the plant was installed in 3 months. Staff training cost is 0.25 million. Plant expected life is 15 years with no residual value. The question is, what would be the cost of the plant to be capitalized? What will be the cost of capitalization? You get the question? Yes, have you read it? Are you there? Can you hear me? Students, are you there? Can you hear me? Okay. So please let me know. Take your time and try to calculate the initial cost. Try to calculate the initial cost and let me know. Then we will discuss the solution. Okay. Try to calculate the cost of the asset, initial cost of the asset. Okay, have you arrived at the answer? Okay, the purchase price is 250. Is 250 million. Now, just give me answer yes or no. LC opening charges. Should we capitalize the LC opening charges or not? Letter of credit opening charges, which is necessary to import the plant. Letter of credit. It is mandatory if a country want to import some. If an importer want to import something, can you hear me now? Now can you hear me? Okay. So the LC opening charges, should we capitalize it or not? Yes, they will be capitalized because without letter of credit, no importer can import. Okay, it is mandatory. Import duty. Import duty. Import duty of 25 million, it will be capitalized. You get it? Now tell me about sale tax, recoverable against the production output. Should we capitalize the sale tax or not? Should we capitalize sale tax or not? No, sale tax will not be capitalized because it is refundable. And then clearing and transportation. Yes, they will be capitalized at 5 million. Then site cost. Total site cost is 5 million. Out of 5 million, 0.8 is the abnormal loss. So 4.2 million will be capitalized. Then we have testing cost. Test cost is 6 million and sale proceeds are 1.2. So 6 minus 1.2, that means 4.8 million will be capitalized. General and administrative overheads increase due to the site are 1 million, they will be capitalized. This 1 million will be capitalized. And the salary, manager salary. Manager salary is 0.25 million per month, multiply by 3 and into 30%, because he spent his 30% time on site. So 0.25 into 3 into 0.3, 0.225 million, 0.225 million will be capitalized. $0.225. So what will be the cost? Now what will be the total cost? it will be 250 plus 1 plus 25 plus 5 plus 4.2 plus 4.8 plus 1 and plus 0.225. So the total cost will be 291. So the total cost will be 291.225. 291.225. You get it? You get the calculation? Students, can you hear me? Are you there? Can you hear me? Can you hear me? Is the voice is clear? Training cost cannot be capitalized. As I told you, in a lecture, the training cost cannot be capitalized. Training cost cannot be capitalized. Training cost cannot be capitalized. Okay, you get it now? Any question? So we have 291.225 cost. Adjustment in, yes, we have capitalized 1 million. We have capitalized. This 1 million has been capitalized. It is a site preparation cost. $1 million. Okay. These are the incremental overheads. These are not the general and administrative overheads. These are not centrally allocated. These are the overheads which are incurred on site due to the construction of the asset. Get it? Okay. So the second part is depreciation. What will be the depreciation for the year ended 31st December? So this plant was started production on 1st May 2012 and year end is 31st December. So the depreciation will be 291.225 divided by 15 and multiply by May, June, July, August, September, October, November, December. So it's been 8 months. So 8 by 12. So 8 months depreciation will be charged. And the depreciation will be 12.94. 12.94 will be the depreciation. Okay, question number 1. IAS 16 property, plant and equipment require an asset to be measured at cost on its original recognition in a financial statement. EW use its own staff assisted by the constructor when required to construct a new warehouse for its own use. Identify whether the cost listed below should be capitalized or expensed. So clearance of the site prior to commencement of construction, should we capitalize it or expense it? Kindly respond quickly. Clearance site prior to commencement or construction, should expense it or capitalize it? Yes, it should be capitalized. Professional surveyor fee for managing the construction work. No, it will be capitalized. Surveyor fee for managing the construction work, directly attributable cost. Own staff wages for time spent working on construction. Number 3. Capitalize. Own staff working on a construction. And general and administrative overheads cost based on staff time spent, it will be expense. General and administrative overheads cannot be capitalized. Those cannot be capitalized. Okay. Okay, students. Now we will end the class at this time. Okay. Now see you in the next week. We will continue the IAS 16. We just started the IAS 16. We will continue the IAS 16 and we will complete IAS 16 in the next class, and along with the other accounting standard Hopefully we will be starting the next week. Okay. You want to share any feedback? Thank you, Ashfaq. Thank you very much. Any feedback you people want to share? Okay then, goodbye and take care. See you next week.